The wisdom of crowds, Tom, we keep talking about this. Are the ETF people pricing this more accurately than everybody else is? I mean, we saw this with in the past. Several times, S&P futures were locked limit down of 5% prior to the open, including today, yet the underlying ETFs, particularly SPY, traded just fine, and they accurately predicted the S&P would drop about 10% today, and it opened, and it did. It was
right.
We saw this with China stocks when China's market was closed in early February. They accurately predicted where China would open. So I'm just asking, Tom, with these discounts to the net asset value, is this the wisdom of crowd, the law of large numbers? The underlying securities don't trade, but the participants seem to get the direction right.
Well, everyone's paying attention, everyone's communicating, and I think what you point out, Bob, in these volatile times, people look for anomalies where they can swoop in and take advantage. With so many people paying close attention, probably like you yesterday, we didn't miss sports because we're paying attention to the White House, coronavirus, and the Fed and all that. It is down to what people will pay, and there's not a better vehicle out there than ETFs to replicate that.
And the alternate side of that, Tom, as you know, is if, again, we think it's a great thing that these pros are willing to step in and make markets. We engage with them every day. If there was an opportunity for a free or really great arbitrage to make quick money, then the spreads would have collapsed. They're all paying attention to that and looking for opportunities and doing the best they can to price things fairly and stay open as a business. If there was really easy arbitrage, it would happen, and you'll see that as vol starts to dampen how much tighter spreads will get.
Yeah,
Let me talk a little bit about what you can advise investors for. We're talking about the ETF business itself. Andrew, the advice to long-term investors from people on our air is basically sit tight. This too is going to pass. Now, for those who are more actively trading, what kind of products are you advising active traders to use to address this volatility? What kind of ETF products might work for you?
Three really quick points on that. I mean, obviously, we do know very active, traders that don't use options. I think options are a great thing. I would focus on listed options, listed index options and ETF options, but understand that vol is high and understand the pricing, meaning that you're going to pay up to put your idea on, and certainly there's risk in selling those ideas. For ETFs themselves as listed tickers, you could look at liquid alts like QAI and MNA, which are less correlated to the overall market and can dampen volatility. And for the traders that have to trade, the last point I would make is RIAs and large strategists, do everything you can to institutionalize your order flow in times like these, meaning have all your options on the table, use professionals. Don't let multi-million dollar notional orders go into retail pipes to be executed. It's time to institutionalize that flow. I think that would help a lot.
Yeah, and Bob,
Tom,
just to add on top of that, at the end of the month, we're just 2 weeks away from monthly and quarterly rebalancing. So these indexes are going to have to go in and buy more of what went down the most and sell what went up the most. That's good. 82% of advisors use model portfolios, and 60% of them actually have tactical strategies. So at the end of the month, it's going to be very, very interesting to see how all this rebalancing kind of works itself out.
Yeah, Andrew, if you had to do a postmortem, let's go down the road 3 months from now. I don't know where any bottom is, but if you had to do a postmortem on this, particularly for the ETF business, and it seems to have held up reasonably well, other than a few anomalies you were talking about, would you have anything on your list? Would you say, you know what, we ought to do next time, we ought to do this, or some advice that you would have for people if you were running the entire ETF industry?
Well, I think the main thing I would say is I love the way that they've held up. I love the way that you could trade them when futures were not able to be traded. I think we can explore the short tick rule. That also actually was able to make spreads a little wider. I understand why that's there, so stocks aren't driven down. But I think in general, like I said before, the best thing that investors can do is learn all their options of execution, learn all the routes that they can use versus, trading on the open and close. We need to continue to educate people, because usually the bad trades are just kind of mistakes that occur in order flow entry, and that can certainly be rectified by more education.
Tom, any advice any postmortems you would like to do here at this point? Anything you've seen that you'd like to improve?
Well, I think the ETF industry operates in a fishbowl, and Bob, you've been on this for years and years and years. We're always looking for that chink in the armor, and we haven't found it yet. We've got people like Andy who are on the front lines doing hand-to-hand combat every day, and they can be our mouthpiece if something's going on. So most importantly, I think we're cheering on the ETF business for sure. It's doing what it's supposed to do at this point. Going forward, I think his words of wisdom about being calm, sticking to your long-term model is important. If you're trading, make sure you're efficient in your trading.
I think the most important thing that I see here is that, once again, ETFs are directionally correct. We don't even use S&P futures as much anymore in the pre-open. We use SPY because there are days, we've had several days in the last week, where the futures, the S&P futures, are lock limit down at 5%, but the SPY and other ETFs continue to trade and give very accurate indications of where the market will go. This is really rather remarkable to me. Again, Tom, as you know, we've talked about this. We saw this with the China stocks when they were closed in early February. To me, this is a vindication that the wisdom of the crowds, and I call it a slight miracle that they get it right, because so many people are essentially making bets, kind of get it directionally correct, even when liquidity is tough to access, as we saw with some of these bond ETFs, Tom.
Yeah, and also, Bob, isn't it funny how we talked about this race to the bottom in fees, and through this whole thing, we're not talking about expense ratios, whether you're paying 4 basis points, 9 basis points, or 50 basis points. What's most important is trading efficiency and keeping an eye on that. And that's really key and critical during these times. And I think advisors, institutions understand that. Great lessons for advisors, too.
Yeah, I predict that this will really throw a lot more money from mutual funds into ETFs for frustrated investors that had to wait to the end of the day to get marked to a NAV. Again, that works for several. There's a large bucket of investors that works for, but there are investors that need liquidity, and certainly ETFs provide that.
Yeah, and there are trillions of dollars in mutual funds today that aren't getting priced accurately on the fixed income side, Andy, and you're absolutely right. So this will be under the microscope for sure, and we'll be talking about this in the months to come.
Yeah, and we want to remind everyone, of course, that is the essential difference between ETFs and mutual funds. ETFs trade throughout the day. Mutual funds do not. You want to buy or sell your ETF, you get the closing price. And of course, that's the big issue. We're in the middle of an extraordinary day again. We are down about 8% in the S&P 500. We were down as much as 11%. 2409 was the low on the S&P. We're at roughly 2492 right now. Keep an eye on all of that. And what an extraordinary day, an extraordinary week we are in the middle of. And all of us here at CNBC, of course, committed to covering all of the action for you.